Good morning and good afternoon, everyone. I'm here with Matthew Unger. Thanks for being with me here today.
Absolutely. Thanks for having me.
Can you give me a little bit of a summary? Who are you and what is your connection to crypto? Why are you here today?
Yeah. I am the CEO and founder of a company called iComplyis. We focus on basically providing regulatory rule sets, compliance automation. We started focusing on just the crypto industry. I've been exposed to quote unquote crypto since about 2011. Really started to get, once I saw things like smart contracts, I started to see how my previous life in finance and current life in technology were being just blended and crossed over in a lot of ways.
Yeah.
So we just realized that this technology is going to underpin all finance, all commerce, probably even most information, secure information transfer, or even validated information transfer.
Yeah.
You know, you want to get rid of fake news. I haven't seen a viable solution that doesn't include a blockchain component, right? So there's just a whole change to how information and money itself, finance is just part of, it's information printed on a piece of cotton or paper.
Right.
You know, it's just information at the end of the day. And so there's many applications to blockchain. Wow. I would say I'm more of a blockchain versus, I'm in the crypto space, but my focus is largely on the technology over the trading or the different elements. But we've, our company's been in the space since 2017. I worked a couple projects at MIT a couple of years before that, looking at things like security tokens, back when that was considered a swear word in the blockchain industry. I remember I put together the first proposal on it, and literally had somebody swear at me saying, "You're destroying blockchain, like you're destroying crypto." And I was like, "You can go ahead and, Bitcoin has its application,
right?
Core level tokens or coins have their application, but providing a layer of information sharing that I can just set a unit against, and that unit could be equal to $1, right? We call a stable coin. That unit could be equal to one share in a company. It could be a bond. It could be all sorts of different things.
Yeah.
There's just so many factors of improvement on so many different levels compared to traditional database architecture. Blockchain's just a database. Yeah. And so that really just kind of blew my mind, and I needed to dive deeper into it. So we've been in the space, actually helped with some of the original NFT launches and development, which is ERC 721 token standard on Ethereum. We actually recently received a patent for security token architecture, focusing on tools like whitelisting and off-chain verification to scale how many transactions a blockchain can do. Right. There's a lot of thinking in the prevailing thought in the more traditional finance or even technology sectors that to say, "Oh, blockchain's not scalable," right? But it's just moving everything onto blockchain isn't scalable. But if you're just using it as a proof, as a foundational proof, you can store the entire internet. Every minute you can take the entire internet and hash it and store it on the blockchain. Wow. And now this is the state of the internet at that time, that in a million years from now you could verify to see if it was true. Right. And there's so many applications. Our application is obviously in the regulatory side of things. We started out looking at things like tokenization. Nobody had compliance tools for ICO issuers, for security token issuers, et cetera. So we wanted to build out libraries of tools that span jurisdictions. 2008 came at a really bad time for us. We just launched a product. It was exciting. We're ready to show investors some real traction. We had a massive level of interest. Yeah. And then of course the market dropped by 80%. Yeah. So, that kind of pushed us down to looking and saying, what can our technology do outside of the blockchain application? If you don't want to launch a token, maybe you're just trying to issue shares in your company, or maybe you're an investment bank, or maybe there's many applications where you could use compliance tools that are multi-jurisdictional. Okay. And so we started applying those tools and launched a second product that we now have those two products going. And kind of our focus as a company, we see in order to use this technology in very traditional business applications, whether it's land title registry, whether it's corporate shares, whether it's a central bank digital currency. There's kind of a whole suite of tools spanning different functions of compliance that exist in the traditional world. And we're just building that out and piece by piece, layering them together in a way that's very interoperable.
Right.
And really providing that kind of that picks and shovels to allow this technology to be adopted in very traditional applications. Yes, there are many decentralized finance applications that are just a complete break from traditional finance. And there's certain parts they can use, but our focus is very much how do we provide trust, integrity, privacy, security in a regulated context.
Trust, integrity, privacy, and security. Did you just rattle those off, or is that some type of like tagline for your company? Because that seemed quite. You said that in quite a succinct way, like you've said it before.
It is a core part of how we look at things. There's.
Can you break each one of those down?
Yeah.
And just explain why each one of them matter in the world of blockchain and crypto?
Yeah, absolutely. So, let's pick an example of NFT non-fungible tokens where somebody here's an image, I'm going to sell it. Now there's, platforms like OpenSea or Rarible. When you're buying, how do you know that the person who posted that even has the right to sell it?
Right.
Right. There's a project that we're involved in that has done some analysis, and they estimate that on one of those platforms, about 80% of the NFTs being created are being created and sold by somebody who doesn't have the rights to
80%?
Yeah, approximately. On one, this is an analysis on one platform's tokens. And so, if I say I'm Banksy, my understanding is nobody knows who that actually is.
Right.
Here's my Banksy tokens.
Right.
People start buying it. Somebody pays $1 million for it.
Yeah.
All of a sudden, oh, this is the Banksy token. Well, how do you know it's actually Banksy? So that, that's the first aspect, the trust, right? And then how do you know, it's one thing to give someone like, oh, I checked it, thumbs up, thumbs down. But how do you know that the process to say this person is getting a checkbox, green, verified, whatever you want? What was the actual process that was done? And that's where tools like blockchain or hashing or different things like that, we can actually provide proof of how the authentication was done at any point in time in the future. Someone can instantly check it. Imagine if you could audit the cybersecurity controls of a company. Instead of having an auditor come in, you could just measure hashes, and you're done.
I mean, I think that's interesting because recently I've watched a documentary on Netflix about we buy tuna and it says, it's like sustainably caught or whatever, but nobody's actually on the boats watching the fishermen catch the fish. We have no idea. And we don't know the process that has gone forward on the verification of this certification they've received. There's no way to verify it.
Yeah, that's a great example. Actually, there's the sustainable seafood stamp industry. There's a lot of pay to play.
Right.
In that, and that's a perfect example. So there's trust behind this certification. Yeah. But what is that sort of what does that stamp actually mean? Yeah. That's where the integrity comes in.
Not much, I guess.
I don't know all of them. I actually have done quite a bit of volunteering and stuff in the space with organizations like Surfrider and Five Gyres and different organizations like this. So I've seen some of the under the hood.
I'm glad this is a relevant example for you.
Yeah, no, it's a fascinating thing personally for me. I moved to the coast because I wanted to be close to the beaches and the ocean, and protecting those for our enjoyment and future generations is important to me. But yeah, that's a perfect example there. That tick box, and I would say an example of trust and integrity might be the organic certified.
Okay.
Because there's very clear standards.
Yeah.
Right. And, there's bureaucracy and there's, different things. But what happened with organic was that there was a lot of focus on the integrity of the certification process and transparency of the certification process. Yeah. And that gives that trust becomes worth a lot more.
So that's trust and integrity. Number 3 was
privacy.
privacy.
Yeah. Blockchains specifically are typically open public ledgers. You know, there are private blockchains, but I'm in the big picture, I think public blockchains will be the lion's share of the applications, especially financial applications. And so you have to be super careful about your database architecture in order to maintain privacy. If I know what your wallet is on Bitcoin, and I can go and see all your transactions historically, right? So how do we allow people to have that privacy while still having the security side?
Yeah.
And that security side can be a number of different aspects to it. One, there's the technical security of, you know, is this a strong password, if you will, or the governance attacks on a blockchain and hashing power.
Okay.
Those are all aspects of more technical security. But then you may also, you know, password strength, et cetera, all these things. But then on the other side, there's also security around, you know, financial services applications. Let's say you want to, Canadian government says, hey, we want to issue a Canada token that's, you know, it's instead of just printing on, you know, it's minting onto a metal and printing onto paper. We're also going to have some of our supply in this digital token form. And so in order for them to do that, they need to make sure that they're not creating systemic risk. And there's a lot of different things that could be used for without the right infrastructure in place. To know who are you transacting with. You know, are you the name of who you're doing business with in the traditional compliance world or regulatory world is super important because everything's based on name and identity. But it's actually, if you use technology like zero knowledge proofs and blockchain and hashing and different technology, even artificial intelligence and edge computing, when you start combining these tools together, name is actually irrelevant. It's it's about the risk, or are you risky? Where's this money from? And so we've, in the traditional, and I'll touch on my world, in the compliance world, most firms in North America are spending 15 to 18% of gross revenue on KYC and AML compliance. KYC, know your customer, and AML, anti-money laundering. And so that gross revenue, like these are the
a big number.
Hugely profitable companies. And it's the largest expense line on the firm. And yet when you look at global regulatory bodies or oversight bodies looking at how effective are these KYC programs, we estimate that we are identifying 20 cents of every $100, 0.2%. 20 cents of every $100 laundered, we're finding. So it's incredibly ineffective. And that's because we're basing this all on no privacy aspect to it. There's Banking Secrecy Act, which is not about your privacy. It's about the sharing of your information, and no one can disclose to you what's happening with your information. But it's not consent driven. It's not privacy centric. It's a horrible user experience. I could go on and on. And so, you know, there's, these are some of the aspects where if you start applying this technology to these types of problems, you can, I believe in our market, that we could be moving from 15 to 20% down to less than 1%. Just applying this technology.
So when we look at the world of blockchain or Web3 or crypto or however we want to kind of spin it, regulation is often talked and spoken about. So first of all, I guess, what is regulation in this scenario or in this industry, and why is it important if it is important? Or maybe it's not important. I don't know. You can comment on the fact that maybe you don't think it's important as well. I'd like to hear your perspective on that.
First, is it important? Definitely. Regulation in some form or other has been around since the beginning of business, since corporations, you know, and even before. I would say that there's a lot of misunderstanding, especially in the crypto space, about regulation. People may think of the Howey test and securities law, right? And they're like, oh, that's regulation. Or they may think of, you know, so I'm going to launch a token, and we measure it against the Howey test. It doesn't meet that. Our token is utility. It's being used in this way. Well, so your token is providing a service. So then goods and services type commerce law will apply. Well, now if your token's moving between here and Germany, you may have some European VAT, some tax tax law that now applies. So this is all different layers of regulation.
Yeah.
What about the fact that you're providing database infrastructure for what could be sensitive personal information? It's privacy regulation there.
Right.
And so regulation isn't going away. In fact, it's generally seen as increasing in most cases. I'm hoping with using this technology that we can really streamline it and be more controls focused, right? About using, how do we structure this in a way, and it's, somebody is launching a token and they're thinking of their token economics.
Yeah.
They're thinking, okay, well, this person, if you're a developer, you get to do this, and they're creating regulation for their closed network, right? And so how can you use this technology in a way where you can say, okay, well, I want to operate this globally. There's 250-ish different rule sets that could apply depending on, and different rule sets depending on what the function of the token is.
Yeah.
So how do I make that scalable? Right now, most of the projects that you see launching, it's kind of about like launch it, and then after the fact, then they all of a sudden default to hiring lawyers to do manual follow-ups, or they get a rescission order from the Securities Commission, and their token project is telling people to print off a form off their website, handwrite in what your wallet address is, dates of transactions, how much you put in, and mail that to a PO box. Right. Like it's insane. And so they're spending hundreds of thousands or millions of dollars the second that a regulator comes in and asks them an incredibly basic question, that if you were issuing shares on a spreadsheet-based cap table using a lawyer in town here, you'd be able to answer that question right away.
Interesting.
But you just didn't think to make sure that your token would account for those things. Right. And then since the data doesn't exist, now you just grind to a halt.
So when we think about regulation in the world of crypto, I guess Bitcoin was founded on kind of anti-government sentiment, libertarian thought, and belief system, small government, remove control, decentralization, all this kind of stuff, which really, I think a lot of people would say regulation is really the opposite of this type of thought. And so, but you speak of regulation in quite a positive way or a helpful way. How do you take kind of the juxtaposition of these two ideas and say, okay, this can work in this space, which maybe wasn't at the heart of it in the beginning?
Well, first I would say that there's, I got into this largely because of my frustration with dealing with regulatory and compliance issues in my previous life. And so whether it's in the finance role, regulated by different regulators, or whether it's in the technology side, providing technology to financial services firms, the headache that regulation provides. So I would definitely would not say I'm pro regulation. I think it's a double-edged sword. You can be massive over-regulation, overreaching by governments and regulators. And I think that where you mentioned Bitcoin, Bitcoin is very regulated within its own network. Okay. How many Bitcoin are allowed? That's a regulated
21 million, and that's it, right?
That's it. Somebody has decided that that's the number.
So I guess we need to understand regulation isn't always just the government limiting our freedom. There are other types of regulation.
And the term of governance might be better than regulation. Typically, you may think of the government telling you have to do something. But governance might be which could come from different angles. And so, Bitcoin with 21 million total supply, with the declining hash, the
halving,
exactly the halvings, and the, all of this structure that was put in with designing how an ecosystem, an economic ecosystem should function. So I would say that from a monetary side, the Bitcoin monetary maximalism, if you will. Taking the economics away from government, I think was kind of a key part, but not necessarily the end of all regulation. Right. And maybe I doubt that was the original intent.
Yeah.
Who knows to
Okay.
speak to someone's intent. But
So when we look at regulation or governance, and if I'm going to launch a token, or maybe I'm going to invest in a company that has launched a token and I want to trade it, how does this organization manage regulation when there are a couple hundred countries out there that all have their own laws that are shifting all the time? And how does one, like you mentioned, okay, well, maybe you got to deal with VAT in Europe, well, did you know that? And how do you deal with that times a couple hundred different countries around the world that have all of this type of regulation and governance that we might need to deal with?
yeah, so I think the early days, you'll call it the cypherpunk era of crypto, like it was just like, there is no regulation exists. This is new.
Yeah.
And then we started applying it to, basic transactions of like investing in your company or different things. And so it's a function, not the fact that it's not on paper, it's on a blockchain.
Yeah.
But you're using it for the same purpose. So therefore it's governed by the same regulations.
Right.
And so we're very early still. And there's, like us, companies like what we do, there's not really, there's a couple of players in the market in security tokens as an example, where, they're providing some rule sets and different pieces, but generally they're largely jurisdictionally specific. There's a few players that are multi-jurisdictional who largely we work with. And we see this as we're building out infrastructure. I want to be able to get to a point where somebody is like, I want to raise money for my company. I want to be able to raise globally.
Yeah.
Here's the documentation. Here's the disclosures. Here's the whole thing. It's just a rule set.
Right.
I'm create and mint those tokens. And,
Yeah.
If I look at the traditional financial services market, there's players like DTCC and Computershare and different players like that who perform these types of functions with their technology, their database technology. Carta is a startup in that space, but they're using this more traditional database technology to do so. So they hold all the keys, and that is, I think, a big shift of where you see where I can now, as a company, I can control my cap table.
Yeah.
I manage that database.
Yeah.
I have those keys. Somebody doesn't have to, if I make a mistake, it's my fault. It's like if I lose a password to my Bitcoin wallet, it's my fault. And that's, I think, an area where applying this technology, these more regulated cases. Hey, I just want to buy some Bitcoin from you and you want some pizza.
Yeah.
Why do we need regulation on that transaction? Right. But if I'm going to, raise $30 million and tell all these investors that I have all these advisors, and then you find out that I just stole photos off the internet and put them up there and none of them are real people.
Right.
I think everyone can kind of agree that there's some people in the crypto space that are like, oh, that's just buyer beware.
Right.
But we're never going to get this technology adopted in the mainstream as long as we take that perspective.
Yeah. Yeah. Of course. You can't expect the consumer to be able to sort through that type of nonsense.
Yeah. It's kind of like the UX issue with many blockchain applications and dApps, NFTs, decentralized applications, non-fungible tokens. I've talked to people who see the horrible user experience. Oh, you've got to go and get this wallet. I helped a friend of mine who's an amazing digital artist, and I was bugging him for like a year and a half when NFTs are just blowing up. And I'm like, you do not understand your art. You have to put this in an NFT. Like, this is like, you're working. This is a side hustle.
Right.
This is just something passionate you want to make money from one day. But you're working this 9 to 5 that you hate, and like it's just sitting here. So finally, I'm like, okay, and I just started to realize how he's a digital artist, but he's not a tech savvy in the way that like, oh, go download MetaMask. Okay, now you're gonna go and you're gonna take this, and now you're gonna go to Rarible and
buy Ethereum and get your gas fees. And
exactly,
oh, I don't have enough gas fees, so I can't buy it.
Well, you're like a step ahead of me in the story here, because that's exactly what happened. I was like, just get your wallet. Okay, send some ETH to his wallet. There you go. That's enough for. That should be enough right now. Check the gas rate. Okay, that's enough for like 5 minutes.
Yeah.
Let's try. Let's post one. Well, it failed. And then the gas price went up, and it failed again. The gas price went up, and it failed again. So he tried it 3 times, and we're sitting there, and and sitting there, and he's like going through, and I can tell the frustration is increasing.
Yeah.
And so after the 3rd fail, he didn't have enough ETH left to try a fourth time.
Right.
And he just threw his phone down on the couch and he's like, this is ridiculous. I'm done with your crypto scams. And
but it is ridiculous, right?
It is ridiculous.
Like the user, like it's so frustrating to go through this process, and there's no way that we're going to get mass adoption on this until this type of stuff is sorted out. Until, you know, like sometimes I think, could my mom buy something? Well, certainly not.
Yeah.
I mean, most millennials can't even sort it out without getting frustrated and walking away from the table.
With our product team, we have the grandma test, and I always bug people like, is it iPhone easy?
Right.
Because, you know, whether it's a grandparent, an aunt, an uncle, you know, great aunt, great uncle, whatever. Like if you look at the previous generation or generations, nobody had to give them, they didn't take a course on how to use an iPhone.
Yeah.
But this is one of the most advanced pieces of technology that humanity's ever seen.
Right.
And so how do you take away the fear, take away the uncertainty, take away the doubt, and give them that user experience? Then, you know, when somebody can just come in and click, and whether I use blockchain shouldn't be relevant. Actually,
well, they maybe shouldn't even need to know that.
Exactly. Yeah. Do you like, is that website, you know, HTTPS or is it HTTP?
Nobody cares.
You know, most people don't pay attention. They just know the website loaded.
Yeah, totally. So I kind of want to end maybe on this thought. So what challenges in Web3 does or does not regulation help us with? Where can it take us in solving some of the challenges that we face today in the world of Web3?
Well, first, there's the application. The regulation in itself is a challenge to stay current, like the example you mentioned. So Web3 has incredibly powerful characteristics as technology to solve those problems. You want to talk about, like, how do you keep KYC, know your customer, send me all your most sensitive information. With GDPR, you can't hold any personal information that's not relevant to your business.
Right.
Like those regulations are in conflict.
Right.
And you've got $20 million fine minimum on one, and, you know, who knows what the fine will be on the other one, depending on how severe the regulator sees it. Right. Yeah. So, you know, potential criminal liability even, you know, and so that's the first thing is you have, for the first time, only in the last about 2 years, we have the ability to nimbly, across any jurisdiction in the world, simultaneously comply with multiple regulations.
Wow.
And in our application, we insert one snippet of JavaScript into a website, and everything populates and powers off of that. You configure in the back end, and the rule sets just load as the user goes through. And so, you know, that's one example. Flip side is the application of the technology as an asset class, right? You have all these different scenarios. So first, there's a lot of scams. We've all seen the rug pulls and the fraud and everything else. And standardization. If we want to see really innovative financial products, standardization in token structure, just look at the stable coins. You cannot just apply one data analytics tool to all of them because the structures are different. Right. And so if you want to see different aspects, you have to, like, if you want to see every company in the world move their cap table into a blockchain-based cap table, standardization, that would turn private markets way more efficient than public markets. Whether it's price efficiency, whether it's security, whether it's transaction processing, it would basically be real time versus, you know, T+2. T+2 is a business decision. It's not a technology limitation, but a whole bunch of different counterparties, the bank, the investment bank, the brokers, all these different players have spreadsheets or databases that they reconcile overnight. Blockchain already automatically does that. Clearing, you know, some of the largest businesses in the world, like processing quadrillions of dollars a year, are performing a function that if you were to put that cap table on Ethereum just does that as part of the equation. It eliminates the need for a lot of this stuff and the risk and all the capital that you have to have sitting there in case something goes wrong. In a lot of these applications, blockchain has never made a mistake, right? So there's a lack of foresight of how the tech could be used, that, you know, somebody said, oh, I'm going to hard code all these rules into my token. And then they don't think of a scenario, you know, and the Ethereum DAO is a perfect example, right? Somebody didn't think of one scenario and all of a sudden they were exploited. So, you know, there's that aspect. But then there's also the scenario of, you know, people regulations changing or different things like that. And so I think there's a lot of opportunity for businesses to do what we're doing. Is like there's so much regulation and there's so many, like there's a company in the States I was recently meeting with that focused on one part of securities regulation, very elegant solution. And it was just like, hey, we need to partner with you guys because you just like covered a huge problem. I don't want to deal with it. Well, we're trying to get to a point of liquidity and efficiency and streamlining these. I think that specifically in the financial services application, I'm not talking about investing in Bitcoin. I'm talking about using blockchain technology for financial services. The cost, like there's a reason why, BNP just press release that came out, BNP Paribas, JP Morgan, et cetera, moving a whole bunch more of their processes onto blockchain because it's so much more efficient for their business, more secure, eliminates a massive amount of manual processing. And in 10 years from now, I think it'll be hard pressed to find a company that doesn't like. It's very likely that we'll see corporate registries, right? The federal registry, the BC registry, even require, we're just going to use a blockchain for this,
right?
Because the transparency is unlimited, without giving up privacy.
That's interesting. That's really good. It's fascinating to hear that because right now in society, if you talk to any person, they probably would think blockchain doesn't really exist beyond crypto, or that there's an unlikely use case for it beyond whatever degenning into NFTs or whatever. And so you present some really good, solid use cases for the future of the technology, which is really important for us to understand. This has been a great conversation. I appreciate your time with me, Matthew. And I think that, we've all learned a whole lot about compliance and governance and regulation in the world of Web3. Thanks so much.
Thank you for having me.
Thanks.